From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Wall Street sees across the valley of tariffs. Welcome to the Wednesday edition of Balance of Power as stocks rally on a reversal from the White House on China tariffs. I'm Joe Mathieu alongside Kailey Leinz in Washington. Thanks for being with us here, Kailey. The president also reversing his position, as we learned late yesterday, on firing the chair of the Federal Reserve, helping investors breathe a little easier today on both fronts.
Yeah, sure, except the president might suggest it was not a reversal of position because it was never his position to fire the Fed chairman in the first place. He said to reporters in the Oval Office last night that he had no intention of ever firing Powell, and that he never did. Of course, he had previously said his termination couldn't come fast enough.
That's right.
As recently as days ago, but certainly that is helping to fuel a little bit more confidence, it seems, in both stock and bond markets. So notably, we are well off the highs of the session on both, as investors still have to consider how long there is to go in terms of progress on the U.S.-China trade front, even if they're signaling some more flexibility.
That's right. We heard from Scott Bessent again today. Around this time yesterday, we were discussing his remarks on China in a closed-door meeting that put a lift underneath this market, the idea being that the standoff can't last forever, de-escalation in the offing. But then, Kailey, he also said a deal could be 2 or 3 years away. And by the way, negotiations haven't started yet.
Yeah, still no one has picked up the phone. It's important to keep that in mind, although negotiations have started with other trading partners like India, for example. The Treasury Secretary suggesting they're close to some kind of an agreement with that country in particular, though it does seem that these agreements might be more just a decision to keep talking than any kind of comprehensive trade framework, knowing that it is a very short window of time they're working with here.
You add a little bit of news from Elon Musk heading back to Tesla, at least to winding things down a bit here in Washington. It does seem to be a little bit more optimism on Wall Street. But to your point, we have seen better numbers today.
Well, we certainly have. So let's get a check on those now. Charlie Pellet, as always, joining us from New York with a look at the markets. Hey, Charlie.
Hi, thank you very much. And here's what's going on. Tesla, tariffs, and Powell, all about de-escalation and relief today with the Dow, the S&P, NASDAQ, a solid advance. But as you both point out, we are well off session highs at the best level of the day. We had the S&P up 3.4%. Right now, looking at a gain of 105 points on the S&P, up by 2%. The Dow up 580, up 1.5%, while NASDAQ is up 485. The NASDAQ Composite Index up by 3%. Our Romaine Bostick will have a whole lot more on today's market moves coming up in just a moment. 10-year 4.36% with the 2-year 3.84%. Gold down $81 the ounce, giving back 2.4%, but still just below $3,300 the ounce on gold. West Texas Intermediate crude down 2.5%, 62.07 a barrel. And Bitcoin, a move there of 2.8%. Bitcoin closing back in on the $94,000 level. Right now, we've got Bitcoin $93,740. Earnings news, Tesla shares are higher, up by 7.5%. Elon Musk vowing to pull back significantly from his work with the U.S. government and put more focus on Tesla. That is easing investor concerns about the car maker's worst quarter in years. Again, worth repeating, Tesla shares, they're gaining now by 7.5%. Repeating, stocks higher, S&P up 110 now, up by 2.9%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And back we go to Washington. Once again, your hosts, here they are, Joe Mathieu and Kailey Leinz.
All right, Charlie Pellet, thank you very much indeed with a check on the markets from New York. Meantime, here in Washington, we certainly have been busy, and it's a busier week than usual here in the D.C. area, as, of course, it is also the meetings of the IMF and World Bank, in which trade, no surprise, has largely dominated the conversation thus far. And on the sidelines of these meetings, there was an event with the Institute of International Finance today in which we heard actually publicly on the record from the Treasury Secretary Scott Bessent after his closed-door remarks to investors at a separate J.P. Morgan event yesterday, in which he talked about the unsustainability of the current tariff regime the U.S. and China have placed on each other. And his message today, when speaking in front of a microphone, was a suggestion that for all of the concern around isolationism and protectionism on the part of the U.S., that the U.S. is not intending to go it alone without multilateral institutions here.
I wish to be clear. America first does not mean America alone. To the contrary, it is a call for deeper collaboration and mutual respect among trade partners. Far from stepping back, America First seeks to expand U.S. leadership in international institutions like the IMF and the World Bank. By embracing a stronger leadership role, America First seeks to restore fairness to the international economic system.
Let's bring in Bloomberg's Dan Flatley covering the Treasury for us here in Washington. Dan, it's great to see you. You look at the market today, you consider where we were a couple of days ago when Donald Trump was talking about firing the Fed chair, and this is a different world. Is this Scott Bessent's market now instead of Donald Trump's market?
Yeah, I mean, it's a good way to think of it, Joe. Lots of things have been moving around the last few days in Washington, D.C. We've done some reporting on Secretary Bessent's remarks at this J.P. Morgan event that you mentioned, Kailey. And it does seem like the administration is striking a much different tone. What accounts for that? Was it a reaction to the market turmoil that we've seen over the last couple of weeks? Is there some grand strategy at play? Is there something else going on? These are all open questions, but it certainly seems like the market is reacting well to Secretary Bessent's comments yesterday, what we heard from Trump yesterday afternoon, and again today, what we've been hearing out of the administration. So it's interesting.
Yeah, one of the things we heard from Trump yesterday afternoon was that he does expect there to be a deal with China, that tariffs will ultimately be below 145% when that happens, that there's been some reporting today that suggests the administration might be looking to lower China tariffs preemptively in order to get them to the table to de-escalate the situation. What was Bessent's message on China specifically today?
Yeah, it's a great question. So after the speech, we had a chance to kind of talk to Bessent, not one-on-one, but a group of reporters, ask him some questions, and he was pressed on this idea of the U.S. unilaterally or on its own starting to reduce some of the tariffs on Chinese goods. And he said, I think the direct quote was, not at all. The president is not thinking about that at all. But, at the same time, obviously, the signaling is there that the U.S. is ready to negotiate. I mean, this is totally different from where we were just 3 weeks ago when this was like maximum leverage, maximum tariffs, and this escalated to, as you mentioned, U.S. Tariffs of 145% on Chinese goods by the U.S. and 125% by China on U.S. goods. So, I think the message was basically we're trying to rebalance trade. We want more manufacturing in the U.S. We want less consumption. We want China to consume more, including some of our goods. And so Bessent is really kind of pitching this as more of a rebalancing rather than a tariff wall, as we heard the president talk about before. So it's a little confusing, to put it mildly. But it seems like the general direction of travel is toward a more moderated kind of posture on trade. So we'll see.
All right, Dan Flatley covering the Treasury for us here at Bloomberg. Thank you so much. And Joe, it is one thing to consider the direction of travel. Yeah. It's another thing to consider the speed of travel. As the Treasury Secretary is signaling that a comprehensive deal with China could take literally years, 2 to 3 years, I believe was his suggestion.
The balance of this term.
Right.
And we haven't seen the 90 deals in 90 days that Peter Navarro has talked about. So there is a question as to whether we're about to see a flurry of deals. Maybe it's a framework, to your point, agreements to keep meeting and negotiating, but that's a far cry from a new world order, an economic world order that we were talking about, moving textiles and button factories back here to the U.S., screwing iPhones together. We're not hearing talk like that now.
But is talk of just simply de-escalating and continuing talks enough for financial markets, risk assets particularly, as we are seeing a rally underway, though, as we've mentioned, well off the highs of the session. We want to check in now with Romaine Bostick in New York, who, of course, is co-host of Bloomberg The Close. Romaine, when we look at the markets today, and I'm looking at moves at more than 2% on the S&P 500 and the NASDAQ 100 a month ago, this would have been absolutely nothing to sneeze at, but obviously it's not quite the rally we were seeing earlier.
Well, it's kind of interesting, too, the complexion of the rally. I mean, you talk about a 2% gain today, Kailey. We had a 2% gain yesterday for the major markets. So if we hold this line today, this will be the first time we've actually had 2 days back-to-back of 2% moves higher in the S&P 500 since at least late 2022. And you've been talking about the sort of tinge of optimism, if you will, on the back of those comments that Bessent made first yesterday behind closed doors and today out in the open. Some I guess, modicum of ratification coming from Trump himself on his social media posts. And that is enough to sort of light a fire. But there's two big asterisks there, Kailey. One is short interest is incredibly high. And I did make some calls this morning because I was curious as to how much conviction there was behind this rally. And a lot of people pointed to the rally that we had about a week and a half ago, where it was more of a short squeeze rather than wholesale buying hand over fist. So it'll be interesting to see what the price action looks like as we get closer to the 4 p.m. close. And more importantly, Kailey, as you know, what tomorrow looks like, because we know all of this could sort of turn around on a dime based on comments that the president or one of his surrogates makes.
Yeah. Well, I'm glad you went there, Romaine, because I wanted to talk about that very issue. When it comes to conviction, we've seen much stronger numbers today. And of course, I'm assuming you're the one reading the analyst notes, that there's going to be a feeling that if investors have the opportunity, they're going to sell into strength after some of the hellish sessions that we've seen over the past couple of weeks. Is that where we are this afternoon?
To a certain extent. I mean, I'm going to give you sort of the economists on the one hand, on the other. On the one hand, there are some people that are sort of looking at the rhetoric coming out of the White House and saying, this does appear to at least be a minor de-escalation of things. Not that the tariffs are going away or this trade war isn't going to happen, but that it might not be as severe as priced into this market. On the other hand, you have a lot of folks that are still looking at economic conditions and saying there's trouble out there. We had PMI data this morning that showed business activity continues to decline, consumer confidence data that continues to show consumers not confident in this economy. And there's a great story in the Bloomberg terminal today, Joe, about CEOs and the number of mentions on conference calls of positive comments versus negative comments. And that ratio, as you can imagine, skewing much more to the negative right now. And I just want to make one quick point, too. You were talking about moving manufacturing back and the time it would take to strike a China deal.
Yeah.
We have to remember, this is the 100-day mark for this administration is like next week. So we're just 3 months into this, and a lot isn't even set in stone. So how do these companies, and more importantly, how do investors react when, as you point out, Joe, this is going to be a long process, even if deals are indeed struck?
He co-anchors our essential program, The Close, but has become inextricably part of Balance of Power these last couple of weeks. Romaine, it's great to have you. Romaine Bostick, watching Wall Street for us as we add the voice of Alonso Munoz, Chief Investment Officer, founding partner at Hamilton Capital Partners. Alonso, welcome back to Bloomberg TV and radio. It was all doom and gloom last time you were on with us here when we were talking about reciprocal tariffs, odds of a recession rising. Where are you on this level of optimism today? Are you a buyer on what you're hearing from Washington?
Hey, Joe, it's good to see you. Good to talk to you guys again. So we have a little bit of whiplash. I mean, I think Romaine made some good points earlier that the sentiment is really, really negative, not only at the consumer level, but also at the business owner level and the executive level. So this is an interesting market. The seatbelt sign is on, and we're going to continue to wait and see how some of the hard and soft data starts to come in over the next couple of weeks, and really looking forward to that Fed meeting May 7th to see what the Fed does. I think the posturing that they've taken over the last couple of days is that they're not going to budge, even against a president that has been, on the attack against Jerome Powell. So, we're looking out at the next couple of quarters, I think, for long-term investors, and most of our investors are. This is a good opportunity to plant a flag in the sand during this volatility. But a lot of whiplash. I mean, at any moment, this market could turn, and we're watching that very closely.
Well, where do you want to plant said flag then, Alonso, given all of the volatility, given the uncertainty, given the wide swath of industries that may find themselves vulnerable to whatever tariff regime it is that we ultimately end up with, let alone the uncertainty that the consumer may feel as a result? Where are the safe places to be?
Well, it's been a tough market, Kailey. I mean, everyone has rushed to cash and to gold, and that's done really well in this market. But as we peel back the layers and look underneath the surface in this market, you have great names in technology, you have great names in financial. I mean, you have a lot of sectors that have sold off, not only here in the U.S., but across the globe significantly, given all of the uncertainty. And so there's opportunities to be tactical, to be strategic, and maybe start to take some of that cash off the sidelines. But buyer beware, as we've talked about for weeks, that this market can turn very, very quickly. And as we go into next week and look at Mag 7 earnings, I know we got Tesla yesterday, we'll get Google tomorrow. We're all going to be looking forward to seeing how these companies are going to deliver against an economic backdrop that potentially could continue to show some weakness as we go into the next couple of months.
Interesting. When you consider export controls, when you consider antitrust as the backdrop for the Mag 7 going into this next quarter. Are you a buyer knowing that they're sitting on an historic pile of cash? Or are you leaning more towards an S&P equal weight to try to balance things out, not really knowing who's next?
Well, Joe, we're a little bit biased. We've owned tech for a long time, and so we're going to continue to be buyers on this dips. But again, the buyer beware sign is up because at any moment, things could change. And I think that's the difficulty in this market, where on one day there's optimism, on the next there's extreme pessimism. But as we look back at the last couple of weeks, I mean, the sentiment has been really, really negative across all indicators. And for us, that's been a little bit of a contrarian indicator that it's not the end. We are going to get through this. We're seeing a little bit of progress. And the comments from Treasury Secretary have been, I think, in line with expectations that hopefully they have deals on the tables. And that's the risk as we run up over the next 30 to 60 days, that we need to see deals. We need to see trade deals on the table for this market to really expand as we go into the summer.
Okay, so we've covered the comments from Treasury Secretary Bessent, others that have a hand in fiscal policy. What about what we're hearing from the monetary policy makers? Because if we can put to bed, at least for now, Alonso, the concern over whether or not Chairman Powell stays in his job, then it becomes a question of how he and the rest of the FOMC actually decide to do their jobs. If they're still paying heed to inflationary risk and not going to be cutting rates in the face of potential growth and labor market risks, where does that leave us as the president has taken to calling Mr. Powell Mr. Too Late?
Look, it's tough. That's the one job I would not want to have in this world is Jerome Powell's job, because he has to battle that public perception that he has been late in the past, and that from a monetary policy, they have made mistakes in the past. So as they look forward, I think they're going to want to be patient. They're going to want to see how this data comes in, and the pressure is mounting. Obviously, the president is very vocal on social media, and he has a right to. But at the same time, Wall Street, and I think in general, has pushed back against the fact that we can't force monetary policy. And we're going to wait and see. I think May 7th is going to be a good indicator of what they're looking at and how they feel. And we get a little bit of data. We get GDP, personal income, personal spending. So the Fed will have some good data going into their meeting in a couple of weeks to lay the groundwork and the blueprint on how they cut rates, hopefully this year.
Hey, Alonso, if our radio listeners could see you right now sitting in your office on Bloomberg TV or on YouTube, they'd see a Cybertruck sitting behind you on the shelf. We got big news from Elon Musk last evening. Is Wall Street better off with Elon in Washington or paying attention to his companies?
Yeah, Joe, I forgot to take that down. So, look, we heard from the earnings. We heard on the earnings call that Elon is going to potentially come back, and that's what investors wanted to hear. I mean, Dan Ives has been, very, very vocal about this, and in some ways, I agree that Elon has to come back and lead Tesla. He has a lot of companies, and I don't know how he has the time in his day to get it all done. But it is likely that, he transitions back to leading his private companies and leading Tesla, and that was welcome news. I thought the earnings call was great. Tesla's had a tough run this first quarter, and hopefully things turn around going into the back half of this year.
All right, Alonso Munoz, thank you so much for joining us. He's Chief Investment Officer and founding partner at Hamilton Capital Partners, here with us on Bloomberg TV and radio as we digest the news we're getting from the administration, the change in tone, frankly, we're getting not just on Chairman Jerome Powell, but on tariffs too. And of course, you're seeing a rally that is still a rally, even if it's not quite as ferocious as it once was, Joe Mathieu, as we're up 2.2% right now on the S&P 500.
What do we do without Elon Musk in Washington? He is apparently winding things down. We'll talk to the panel about that. Rick and Jeanne are on the way in next here on Bloomberg. From world headquarters in New York, the voice of Wall Street and the New York subway, as Wall Street again keys off rhetoric from here in Washington, with the White House backing off China tariffs and backing off threats to fire the chair of the Federal Reserve. Add the news on Elon Musk, and we've got a very different picture than we were looking at just a couple of days ago, as, of course, the leader of Tesla and SpaceX, and while we're at it, the DOGE, suggests that he's going to be winding things down, making us wonder, will Elon Musk no longer be a government employee by the time the Resolute desk is returned to the Oval Office? He spoke with investors on the Tesla quarterly conference call last evening.
Starting probably in next month, May, my time allocation to DOGE will drop significantly. I'll have to continue doing it for, I think, the remainder of the president's term, just to make sure that the waste and fraud that we stop does not come roaring back.
But how much waste and fraud have they actually stopped? How much work will actually be done for the Department of Government Efficiency by the time May comes around? On that note, let's turn to our political panel. Bloomberg Politics contributors Rick Davis and Jeanne Zaino are with us. Rick, of course, Republican strategist and Stonecourt Capital partner. Jeanne, Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress. Rick, when he considers or when he characterizes his work as being mostly done, talks about having rooted out all this waste and fraud, how much tangible do we really have to show for his work over the course of the last several months? Because remember, we came into this being promised $2 trillion in cuts potentially.
$2 trillion that before the administration even took office got down to $1 trillion. And of course, they keep a running total of all these cuts that changes every day because a lot of people focused in on that and realized a lot of those cuts were either done during the Biden administration or that they didn't represent accurately what had been done. Look, the real story of DOGE won't be told for a while. We also know that there are lots of lawsuits in federal court to determine whether or not the people who were fired under the DOGE fraud, waste, and abuse efforts will actually be able to ultimately be severed. But look, I mean, one thing is clear. They've changed the culture in Washington in a very material way. They showed that an administration that is willing to take some shots can actually do what many, many administrations prior threatened to do, claimed they were going to do, and never did. And that is to actually make a more than cosmetic change on the organization of the federal government. The Department of Education will never be the same. There's a question as to whether USAID ever exists again in as an independent government agency. So there are a lot of examples of impact, and I think at some point there'll probably be books written about the positive and negative impacts of DOGE and of this period of time. But there's no question the one thing DOGE is going to be mostly remembered by is the cheerleader in chief, Elon Musk, and the impact he left on Washington, D.C. And I'm not sure we have the final chapter of that being written yet.
Well, that's clear, Jeanne. So, okay, the DOGE leaves a mark, but is this another example of the White House backing off goals? We've just listed a bunch of them when it comes to tariffs, right? We've seen a bit of a reversal there, a softening tone, suddenly going from firing Jay Powell to I never had any plans to do that. Now the DOGE, which was intended to cut $2 trillion, will not have the receipts to prove that. Is this a consistent theme here that we're seeing out of this White House?
Yeah, I think it is. And I think it is probably a good thing politically for the administration that Elon Musk is going to be stepping aside. I mean, we always knew there was an end date to this. He said yesterday it's coming maybe sooner than some people thought. But the reality is that the politics of this have not been good, either for Elon Musk and Tesla and his other operations or for the White House. Because again, while most people support consistent cutting of the federal government in ways that make sense, streamlining and efficiency and all of those things, we heard from the town hall that Byron Donalds had this week when he was home on break. People are not buying this. When you say DOGE, when you say Elon Musk now, what comes to their mind is a chainsaw-wielding billionaire and not the efficient, effective cuts that the administration had hoped for. So probably on all sides, this is a good thing that they can sort of amicably part ways.
But is it a good thing for Democrats, Jeanne? Because Elon Musk was emerging as the main foil here. It was less about a Donald Trump or referendums on Donald Trump, as we've just seen in special elections just weeks ago, and more about Elon Musk himself. What happens if he kind of disappears from the Washington spotlight? What do Democrats do then?
I think Democrats should focus like a laser beam on the economy, the Medicare, Medicaid, Social Security fight that is coming up. what the administration and Republicans in Congress are going to do about this big reconciliation bill. Elon Musk has been the focus of a lot of Democrats' ire, and some people feel for good reason. But the reality is, and I've long said, their focus should be on the person in charge, and that is not Elon Musk. That is the president. I mean, let's be fair to Elon Musk. He broke with the president on the president's number one issue, which is tariffs. The president owns what's happening in Washington, not Elon Musk. So I don't think this should hurt Democrats.
Rick, I don't know if Elon Musk gets to keep the chainsaw from CPAC. That will be the enduring image that a lot of Americans have from this moment in time. There you see it on Bloomberg TV and on YouTube. But I wonder if the strategy, because you just listed a couple of things, USAID, that's going to leave a mark, right? Some of the cuts we've seen at various federal agencies, but it brings me to the firing of federal workers. Americans aren't looking at receipts to see if they stack up to $2 trillion. Does the impact, though, of firing thousands upon thousands of workers lead most people in the electorate to think that Elon Musk did what he said he was going to do?
Yeah, I think the optics are pretty clear, and certainly going to be very clear to the sort of MAGA base, which is we finally kept the promise that, we were going to cut up Washington, drain the swamp, and get rid of all these government bureaucrats that were part of the deep state. And he's going to get credit for that, and Donald Trump's going to get credit for having brought him along to do that. But you're right. I mean, we're going to see that chain-wielding maniac on the stage of CPAC in a lot of midterm commercials. And I look forward to the return.
That's got to be true. Chainsaw for bureaucracy, Kailey.
Well, of course, that chainsaw-wielding maniac, if that's how Rick would like to describe him. It also happens to be the CEO of Tesla Motors.
True enough.
And was serving in that capacity last night when the company reported results. And he immediately had to get on the call with analysts, not just to announce this DOGE news, but also talk about, Rick, the impact tariffs are having on Tesla's business, both on the energy side and on the automotive side, suggesting that he doesn't necessarily agree with President Trump on this, though he said that it is ultimately a decision for the president. What do you make of that kind of rhetoric publicly on an earnings call coming from someone who is supposed to be one of the closest advisors to Donald Trump?
Well, I think self-interest caught up and overran public interest to Elon Musk in the last couple of weeks. Nobody, I think, has lost more money in the world than Elon, hundreds of billions of dollars off of his net worth, in just since this administration took office. I'm sure there were days he was scratching his head looking at the numbers going, what have I done to myself? You earned it, you lost it, it's all up to you. But look, I mean, he was cautioning about, the tariff program even immediately after Independence Day. Liberation Day, and so you could tell he understood the potential ramifications on his own businesses, and now frankly they're calling him home because of that impact. And so whether it's because of his public image and there's fewer car sales, or whether it's because of the impact of some of these tariff regimes on supply, there are a lot of impacts on Elon Musk, and I think he's learned a valuable lesson on participating in the public sector. Sooner or later, the Klieg lights of Washington get right down to what you're all about. And the fact that he's leaving now because of his economics is not going to be the first time somebody in public service has done it, but certainly the highest profile version of that.
Wow. Well, Jeanne, I don't know when the final version is going to be written here. But is there a chance that we look back on this and even Democrats like you say, boy, we were lucky to have Elon Musk in the Oval Office in that period of time because he's one of the people who pulled Donald Trump back on tariffs?
I don't think we've seen evidence that he pulled Donald Trump back on tariffs. I'm going to give that more to people like Scott Bessent and those CEOs. But to his credit, he did speak out against them. The reality is when you guys come to one of my classes, I teach a lot of political risk. And Elon Musk took a big risk here. And he's a big gambler. That's why he's been so wildly successful. And for the immediate aftermath of the election, it was paying off big time. Nobody was closer to the president than he was, and he got a lot of money off of that. But now he's seeing the flip side of that, and the price that he is paying are these boycotts and this backlash. We don't know how this story ends, and one of the big questions is, what does this do to Tesla's brand? EV buyers are a lot of people who are not very close to Donald Trump's policies, and so for the creator and the owner and the major spokesperson for Tesla to go and be this close best friend of Donald Trump is something that has had a real impact on his business. So I think we don't know how this story ends either for Tesla or for Elon Musk. But the reality is Washington is under Republican control and the control of this president. We shouldn't have to have his best friend pull him back. He should look at the responsibility of his policies as they go into effect and pull them back on their own when they're not working.
I think we just got an invite to Jeannie's class.
I'll take her class.
Absolutely. Let's say we bring the whole show
Back
in
to
there.
school.
We can learn a lot here. Are you kidding me? Jeanne, Zaino, and Rick Davis, thank you both. Our panel today. And we'll have much more ahead here on Balance of Power with Ukraine also in the news. There's a lot to cover here. And Melinda Haring from the Atlantic Council will be with us next as talks potentially hit the rocks. That's coming up next here on Bloomberg.
All right, Charlie Pellet keeping us covered from Neuralink to the Treasury Secretary. Thank you so much. As Charlie alluded to, Secretary Bessent telling reporters that the U.S. is not looking to unilaterally lower tariffs against China, though perhaps if you're looking for areas of optimism, he did suggest a trade deal with India is getting closer, at least some kind of understanding as to what the broad architecture of that could look like, keeping in mind these deals may take some time to actually fully finalize. But of course, that has been the effort underway in India this week by the Vice President of the United States, J.D. Vance, who had bilateral talks with the Prime Minister, Narendra Modi, and talked about trade. But we also heard from the Vice President while he was in India today about a completely separate issue, and that is ongoing efforts toward ending the war in Ukraine, a peace agreement being reached between Ukraine and Russia. This, of course, as there was a meeting in London today that was supposed to be attended by the Secretary of State, Marco Rubio, and those at the highest levels in foreign policy in the governments of France and Germany and the UK and Ukraine as well. Rubio didn't go. The envoy, Keith Kellogg, went instead, and this was reduced to kind of a technical level meeting. And this is how the vice president characterized the state of things.
We've issued a very explicit proposal to both the Russians and the Ukrainians, and it's time for them to either say yes or for the United States to walk away from this process. We've engaged in an extraordinary amount of diplomacy, of on-the-ground work. We've really tried to understand things from the perspective of both the Ukrainians and the Russians. What do Ukrainians care the most about? What do the Russians care the most about? The current line, somewhere close to them, is where you're ultimately, I think, going to draw the new lines in the conflict. Now, of course, that means the Ukrainians and the Russians are both going to have to give up some of the territory they currently own.
Another suggestion of walking away, echoing Marco Rubio, who made that reference on Friday, knowing that Donald Trump campaigned on a promise to end this war. As he said, he was the only one who could do it. He would end this within hours on day one. He's speaking very differently today on Truth Social. President Trump referring to comments from Volodymyr Zelensky, as he says, boasting on the front page of the Wall Street Journal that Ukraine will not legally recognize the occupation of Crimea. It's a long post. Donald Trump goes on to write, it's inflammatory statements like Zelensky's that makes it so difficult to settle this war. He has nothing to boast about. The situation for Ukraine, he says, is dire. He can have peace or he can fight for another 3 years before losing the whole country. That's where we start our conversation with Melinda Haring, non-resident senior fellow, Atlantic Council, and a voice of experience when it comes to all things Ukraine. Melinda, it's great to have you back. Is that where this is going, losing the whole country?
Not quite, Joe. And there's a few other factual errors in Donald Trump's statement that he put out. So he says, why didn't Zelensky and all of Ukraine fight for Crimea when the Russians illegally annexed it? And the Ukrainians, he forgets that the Ukrainians didn't have any money, that there was no way to fight back. And I think that's an important point as well. But no, things are not headed in a good direction. We know that the White House has lost patience with negotiations, and they found this entire negotiation exercise much more difficult than they expected.
Well, and certainly President Trump has suggested that Vladimir Zelensky himself is contributing to that difficulty. The U.S. position seems to be, Melinda, that Ukraine is going to have to be willing to give up some territory if they ultimately want a settlement in this war. Is that the wrong way of thinking about this? How could they possibly reclaim all the territory that has been lost, Crimea included?
Hey, Kailey, I don't think that's actually the stumbling point. So we've seen a 7-point peace plan, and that's what we thought they were going to be arguing about in London. And the real stumbling points are the U.S. is asking Ukraine to give up NATO membership. It's also asking it also wants to recognize Crimea as legally Russian. And this, I think it's worth reminding our audience, back in 2018, when Donald Trump was president the first time, the State Department issued something called the Crimea Declaration, and it said that we will never, ever recognize the use of force to take territory, that this is illegal under international law. So if you go back to Donald Trump's first administration, the policy that they're trying to push now is not very consistent. I mean, look, it's politics. No one's very consistent, but it's worth pointing out that they're in a very different position. So I don't think Zelensky is willing to concede some territory. I think he understands he has to, but the real issue is there's no security guarantees. And the U.S. is unwilling to give them security guarantees, and the British government has said that it must have a U.S. backstop. So we're sort of stuck. We're very stuck. But there's a bigger issue that I'm really worried about. So when Donald Trump and J.D. Vance say we're pulling out, I want to know what that means. Does that mean we're not going to participate in the process, or does that mean we're not going to cooperate with intelligence sharing, and we're not going to allow Europe to buy weapons for Ukraine? If it's the second, Ukraine is in a really hard spot. If it's we're not going to participate in the negotiations, I'm a lot less worried.
Interesting. In the end, though, Melinda, you've been talking to us since before the invasion actually took place. Every wrinkle, we've had a chance to get your analysis. Do you see any world in which there is a peace deal struck that does not favor Russia?
So I think it depends on the facts on the ground, but Ukraine is not going to agree to anything, Joe, unless there's some kind of security agreement to ensure that Russia doesn't come back. So right now, Russia occupies 20% of Ukraine, and they're likely going to have to give up some territory. But when I talk to medics on the front line, Joe, they tell me that we are totally committed to defending Ukraine, even if the U.S. is not there. So the mood in Ukraine has not changed, but I don't think the situation is ripe for negotiations at this point.
Well, Melinda, I want to return to your point about kind of characterizing what walking away actually means for the United States. If it were to be just we are removing ourselves as a third party in these negotiations, leaving it for either other countries to mediate or Ukraine and Russia to sort this out among themselves, would that actually make it easier for the Ukrainians, or does that make the whole thing more difficult because Vladimir Putin may not want to go ahead or essentially take this directly to Zelensky?
So the negotiating format is a little bit difficult, Kailey. So right now, Putin is saying that he's willing to meet with Zelensky. And Zelensky has said before, I will not meet with him directly, that there has to be an intermediary. Zelensky is now saying, I'm willing to consider all formats, but you have to stop killing civilians. And that's one of the difficulties is Russia has not stopped its missile strikes. So that is a prerequisite for any kind of negotiation. To your bigger point, though, if the U.S. were to step back from being the lead negotiator, I think it's not the end of the world. I think Britain could take that place. I think that Turkey would be interested in taking that place. I think there's some Middle Eastern governments that might be willing to take that place. And Ukraine doesn't see Washington as a neutral actor at this point. Every one of the positions that they've been pushing in these negotiations is seen from Kiev as something that doesn't favor them. So I don't think it's a terrible thing if Washington walks away from the negotiations.
There was a time, Melinda, when peace appeared to hinge on the signing of a minerals deal. Remembering Scott Bessent's ill-fated trip to Kyiv, we're still, according to President Trump, expecting something to happen. Here's what he said about a minerals deal potentially happening this week.
We have a minerals deal, which I guess is going to be signed on Thursday, Scott, next Thursday, soon. Yes. And I assume they're going to live up to the deal, so we'll see. But we have a deal on that. No, I have no comment on that. I have no idea That's his statement, not mine.
All right, so that was last Thursday. Melinda, will it still happen?
Joe, I don't know. I've been poking around on this. The expectation is that it was going to be signed tomorrow. That was 5 days ago where the initial agreement was signed between the United States and Ukraine. And it's an 80-page document. The details of that document haven't been released yet. But what's interesting is that the 7-point negotiating document that the United States gave Ukraine, one of the points was the mineral deal. So it seems like the mineral deal is contingent on Ukraine going along with this bigger plan that President Trump and Vice President Vance had envisioned. So I think it looks like it's in trouble, but let's watch and see.
Well, we certainly will be on watch tomorrow to see whether or not this deal ultimately is signed or if there's any progress toward it in the first place. But the original basis for it, Melinda, was that having an economic incentive or economic interest in Ukraine would be some kind of security guarantee. And obviously, we've discussed that thoroughly with you. In the absence of a deal being signed and the U.S. still not being willing to pony up on any other kind of security guarantees, what position does that realistically leave Ukraine in? I'm just trying to consider their position here as they decide whether or not to sign on the dotted line.
Right. So Ukraine is going to put increasing pressure on European governments, London in particular, to make good on the commitment to put troops on the ground and provide some kind of security backstop without Washington. I think that's where we're going next. And I wasn't privy to the discussions today. I'm sure that was discussed in London. And I think there'll be increasing pressure on Ukraine's other friends in Asia and in other parts of the world to deliver military kits so that Ukraine can stand the fight and defend itself.
Was this always the direction we were going in here, Melinda? We're just kind of getting to the reality of the matter now? Or did that meeting in the Oval Office send things off the rails and potentially permanently for President Zelensky?
Joe, it's a great question. I've been told that President Trump was actually in a good mood and wanted progress in the relationship that day. And we still don't know why it was spiked. I think it's possible that Donald Trump, look, never say never with Donald Trump, right? It's possible he'll wake up tomorrow and say, I'm fed up with Vladimir Putin. He's unwilling to move. I don't see it happening, though, at this point. I think that Donald Trump wanted an easy deal. This is not going to be an easy deal. And I think he's going to move on, unfortunately, for 40 million Ukrainians.
Wow.
Wow. So Steve Witkoff, as he gets ready to head to Moscow and Vladimir Putin, has no real hope of success in your mind, Melinda?
Look, you can't force the Ukrainians to sign a deal that won't bring them lasting security. So I don't see how this deal goes forward. This is Witkoff's fourth trip. And I think they're going to discuss the peculiarities of this agreement. But Zelensky's already come out and said that accepting this agreement would violate the Constitution of Ukraine, and no president can do it.
Well, Melinda, I'm not sure what happens from here. What signs should we be watching for? Is it a meeting that includes Marco Rubio and Witkoff that would get your attention? What are you going to see that you might take seriously?
I'm going to be watching the battlefield. That's my eyes in Sumy in northern Ukraine. I want to see what the Russians are doing there, and I'm going to continue to watch and see. There's some interesting reports that North Korea is also sending workers to Russia, Joe, which indicates that Russia doesn't have enough people to be fueling its economy. So I don't think much is going to happen on the high-level negotiations, but the real issue is the security guarantees and also the production of weapons in Europe. So watch that space.
All right, we will be, and we trust you will be as well, and continue to come back and share your insights with us. Melinda Haring, Senior Fellow at the Atlantic Council's Eurasia Center, joining us here on Bloomberg TV and radio. Thank you so much, helping us keep, of course, one eye on geopolitics and another on economics in the financial markets as we consider everything we've heard in just the last 24 hours, frankly, Joe, on tariffs from this White House, which obviously has changed in tenor from what we were hearing previously, and we're seeing markets take note. Not the explosive rally we were seeing earlier necessarily, but still looking at almost a 3 percentage point gain on the NASDAQ 100, up more than 2% on the S&P as we speak.
Feels like an important inflection point when it comes to the economy, when it comes to tariffs, of course, the Fed chair, and yes, Ukraine. We'll have a lot more on this, on all of this. 5 p.m. Eastern Time, the late edition of Balance of Power. I'll meet you back here on Bloomberg.